morning everyone, this is Amit Prabhari, founder and managing director of CR Forex. कहते हैं every chart tells us some kind of a story. So in today's presentation, we are going to discuss few important charts and try to understand what these charts are telling us and what kind of view we can make from the chart. So let me start with USDINR chart. If you see USDINR chart, it is giving us a clear-cut indication that 83 to 83.25 is acting as a very strong resistance for the pair. To form rupee ka view, it is important that we understand what is happening in dollar index and what is happening in other Asian currencies. Let me show you an interesting chart of dollar index. If you see the chart on the left hand side of the table, it is a dollar index chart. It is giving us an indication that 103.50 is acting as a very strong resistance for dollar index. And if you see a chart on the right hand side, it is a chart of 10-year US yield. There is a positive correlation between 10-year US yield and dollar index. If yield is moving higher, dollar index generally moves higher. If you see the chart of yield, it is also showing a great resistance is there at 4.34 kind of a level. Now let us understand why we are expecting a correction in dollar index and 10-year yield. Now the most important event for the coming week is Jackson Hole meeting. In the Jackson Hole meeting, central bank leaders from across the world come and discuss about interest rate and economic outlook. Mr. Powell, who is the chairman of Fed, has been discussing about economic outlook and interest rate regime in US from last 5 years. And if you see the chart, if Powell is sounding hawkish, then dollar index is moving higher. When I say hawkish, when he says that interest rate is going to increase in coming days in US. So from the table, we are understanding that if he's sounding hawkish, the dollar index is going to move higher. Now, in the coming meeting, we are expecting him not to be that hawkish. Why? The entire logic is US inflation, which was trading at 9%, now has come down to 3%. If he is not sounding hawkish, then dollar index and 10-year yield will come down and it will be a positive news for rupee. In order to understand dollar rupee pair, now let us move to the second part of the presentation, understanding what is happening in Asian currencies. So the first chart is of Chinese Yuan. If you see the chart, Chinese Yuan is facing great resistance at 7.35 to 7.37 level. And Chinese government has taken two important steps. First, Chinese central bank said to its state bank that you have to sell dollar to prevent yuan weakening. Second, they have told investment fund not to sell, be a net seller in equity market. Because of these two reasons, we are expecting Chinese yuan to move towards 7.30 and 7.25 level in coming days. Third chart देखते हैं Japanese yen का. If you see the chart, Japanese yen is also facing resistance and उनके भी central bank ने verbal intervention किया market के अंदर पे, because of which we are expecting USDJPY to come down towards 142 level. If that happened, it will also be a positive impact on other emerging market currencies and Asian currencies. Now let us discuss outlook for rupee. All charts are at a resistance level and there is a 75 to 80% probability that dollar index, 10-year US yield, Japanese currency and Chinese currency will all make a U-turn, which will be a positive for dollar rupee pair. So in the medium term, we expect rupee to move towards 82.5 to 82 kind of a level. For the next week, we expect the pair to consolidate between 80 to 80 on the lower side and 83.25 on the higher side. Now let us discuss strategy for thin margin exporters. Thin margin exporters like agri exporter or chemical exporters, they have started taking costing near 83 levels. For them, the simple strategy is that they should cover 100% on a back-to-back basis. If anyone wants to wait, they should keep a strict stop loss of 82.85 or costing whichever is higher. Let us discuss strategy for thick margin exporters like textile or engineering exporters. Between 83 to 83.30 on an order basis, they can hedge 85 to 90% of their exposure. If they are hedging on anticipation basis, मीन्स पूरे साल का टर्नओवर के ऊपर में दे आर हेजिंग, देन आइडियली दे शुड कीप अ हेज रेशियो बिटवीन 55 to 60%. Now a lot of thick margin exporters have been asking us that whether they should be utilizing the long term forward as rupee is moving higher. We will suggest them they should wait for now and they should take payment on the spot basis because we are expecting rupee to correct towards 82.5 to 82 kind of levels. Let us discuss strategy for importers. From the chart, it is evident that rupee is facing resistance near 83.15 to 83.20 kind of level. So importers should wait to hedge their medium term imports which are due after 15 days. For near term imports, they can take buyer's credit if their position is unhedged. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.